Okay guys, time frame aligned ranges with intermediate term perspective key levels. Okay, so remember the intermediate term perspective is the H4 and H1. Okay, this is the exact same logic that we used for the time frame aligned ranges with the LTP key levels. However, for the ITP key levels, we want to blend ITP key levels with its relative time frame range. Okay, so remember we are trading the H4 and the H1 in the direction of the very next weekly and or daily candle. So the previous lessons are essential. Time frame aligned inducement range for LTP, ITP key level, sorry. So H4 key level, we're going to use an M15 range, okay? H1 key level, we're going to use an M5 range. So let's look at that, right? So first we go from an LTP, right, which is the next daily candle's direction. Right? If we're going to be looking at a H4 key level, which you guys know is only one of two things, right? Rebalance and imbalance or run out stops in the direction of that daily candle. And then we're going to use an M15 range, right, to trade the 4-hour key level, right? So you can see how we're now starting to blend everything together to get to that STP and equity open. Okay, so this example again, right? Buy side liquidity, low that broke the high. Okay, candle closures here within this one candle, aiming for higher time frame key level to higher time frame key level, down back into a discount. Okay, so we're going to focus on these two key levels, right? So remember, we have a daily candle's bearish direction from when this day closed within, right? So this day closed within this one candle here, over here. Okay, so going forward, right, we're looking for shorts until we get to the low that broke the high. Okay, so on a 4-hour, what are we looking at? Either we're going to run out a swing high or we're going to rebalance an imbalance. So in this case, we had a 4-hour FVG formed here. We rebalance that imbalance. Here we have a 4-hour key level. We're going to look at both of these, okay? But let's start with the one up here. Okay, so when you have that daily candle direction now, okay, and now you have a 4-hour key level, right? It's either going to be a stop run, right? Or it's going to be a fair value gap. When you're looking at a fair value gap, we still look for a range with it. Okay, why? Because like I said, we are always trading a range. So this is how you'd be looking at the market beforehand. Now that you have a direction for the daily candle, you know on the 4-hour, there's only two things I need to look for. You see that 4-hour fair value gap. Now let's say you're here, okay, and you already know this is your key level, right? Your 4-hour FVG. This is how you want to start looking at price. This low is obviously connected to this high on the M15 when we're using a 4-hour key level. So you map those two levels and you sit on your hands and you wait. You wait for the one side of the range to get taken. We're bearish, so we're waiting for the range high to get taken. When at a key time, we're going to be focusing on equity open. We then take the range high into the key level and distribution extremely aggressively, right? AMD, okay? This would have been tricky to get into, okay? On a much lower time frame, it essentially just went straight down the equity open. But with this logic and framework, right, you don't even need to go to the STP, right? You could be shorting the 4-hour, but you would need to use a 4-hour size stop, okay? Now let's look at this key level here, right? So rebalance and imbalance or run out a short-term higher low. In this case, we have this 4-hour fair value gap here. It forms. We now have a ITP key level to trade in the direction of the LTP, draw on liquidity here. So let's look at the 15-minute chart now. So what do you see here? Okay, imagine this is in real time. You have that daily candle direction, okay? And now you have your 4-hour FVG key level. What do you see? Where should your eye go on the M15? Right? The range, this low, okay, is obviously connected to this high. That's your range, right? Remember, the range is episode. Do not overcomplicate it. It really is this easy. 50% of the range is important. We run out the range high, accumulate the buy stops above range high. We close below the down close candle. What is that? That is changing the state of delivery, okay? We then form a displacement. So all the characteristics of institutional sponsorship are in play. We could be shorting here, okay? This is not equity open though, so we're blending it with a key time. This is the Asian session, which we're not touching. We trade to equilibrium, consolidate around equilibrium, we trade back up into the OB, right? The change in the state of delivery OB here. And then during equity open, if you look down here, that this is equity open, we then start to trade it lower, and around 50%, you can see this is not random, it's accumulating at 50%. We confirm our OB, we're really close to 50%, so we can still short this, and then it absolutely melts through the range low, and then to the daily chart LTPs draw on liquidity. Okay, let's look at the 1 hour. Daily candle direction, right? Again, LTP direction. Let's say the 1 hour key level is what we're going to be using, and we want to be looking at a 5-minute range to trade that 1 hour key level, right? So back again with this example, right? And I'm using the same examples here on purpose. Nothing is random in this course. Monthly key level here in discount, right? We're entering a bullish seasonal tendency. We are wicking below, right? All of the LTP narrative is in place to start determining a bias, right? Remember, if we close within one candle, it becomes a consolidation. What do we do in consolidation? We wait. We take the low, we wick below, right? So we can be bullish from this day. So that's why I'm choosing this day here, okay? Because it's in alignment with our LTP analysis. So let's look at this day here. We have two H1 key levels that we can frame the trade off because, right, on the H1 and H4, we're gonna do one of two things. Now, let's look at these two key levels, okay? And look at them on a lower time frame, right? Because we want to be trading a 5-minute range, a time frame aligned range with this 1 hour key level. What do you see? Again, start training your eye to spot the ranges. Okay, do you see the low that's obviously connected to the high? Right? This low obviously connected to this high. M5 range for the 1 hour key level. You also want to map 50%. There you go. The market trades into the 1 hour key level, close above the order block here, right? Starts to accumulate the low, right? It's all it's doing here, okay? All of this, by the way, is just accumulating the stops below the range low, all of this. Then you finally get a displacement here that you can work with. You could go long there. Notice the time, it's within London session, it's in a kill zone. Hits 50%, not a random reaction, trades back down. We're in discount of the range, okay? High probability long to clear out the range high, aggressively trades through and continues because it's based off the higher time frame, right? Okay, now let's look at this example here of this 1 hour key level. So this key level here, we're gonna blend it now with a 5-minute range, right? Low, obviously connected to this high, 50% of the range. We wait for the range low to get taken, gets taken here. Here, no confirmation on the change in the state of delivery with these down close candles. However, here we run out stops one more time, okay? Close above, okay? We trade through 50%, and then there's a fair value gap around 50%. So all of this is discount, so this is a valid entry. And now look here, okay? What time is this? Equity open, right? So with this framework, you know that equity open, hint by the way, equity open should be immediate distribution. So a lot of you guys will know how to trade the equity open manipulation but don't know how to trade distribution. This is one of the core concepts to being able to catch the distribution as well, right? When 930 immediately moves in your direction without that stop hunt, you're sometimes scared to take the trade before, right? Because it could aggressively move through your stop because you don't know if it's going to be distribution or manipulation. So you're always waiting for the manipulation, right? This is one of the core concepts to determining whether it's going to be distribution or manipulation, which I will teach you exactly how to know that later on. So this here would be a high probability long to catch the distribution in equity open.